Hello, I'm Tyler Tully and today I'm joined by Odyssey Gold Executive Director Matthew Syme. Matt, thanks for being here today.
Terrific to be here, Tyler. How are you?
I'm good, how are you?
Yeah, very good.
So you've just received some nice looking intercepts from your Tuckanarra Gold project. Talk us through these results and the greater significance here.
Yeah, we're really excited about these outcomes, Tyler. We've been drilling, infill drilling around the Cable deposit to upgrade the resources there from inferred to indicated. But as part of that drilling, we've hit another structure in the hanging wall of the Cable deposit, about 40 metres away from the main mineralisation, an intercept of 20 metres at 7 odd grams, so a fantastic intercept. Shallow, I think it starts at 48 metres or something, 45, 48 metres. I mean, at that sort of grade, going to be a very mineable proposition at those depths. Interestingly enough, that intercept falls within the pit design for a pit we've optimised for mining the Cable deposit. It was previously reported obviously as unmineralised or waste, and so that sort of grade and that sort of thickness is going to have a really serious impact on the economics of that pit, both increasing the average grade and reducing the strip ratios overall. So that's pretty exciting. But it also points at the real shallow exploration potential left in that area to find that sort of high grade shoot and get that sort of outcome while just infill drilling. Points at real serious exploration upside for that area. I mean, how many more of those shoots are there? And sorry, just to quantify what that looks like today, that hanging wall shoot, we've intercepted it over about 300 metres of strike today. It runs parallel to the main structure at Cable West. 300 metres of strike and intercepts ranging from a gram up to these 7 grams, and thicknesses from 4 or 5 metres to 20 metres. It's easy to imagine there's going to be a significant additional resource in that vein, and then the question of course becomes how far does it extend? It's open along strike, and how deep it goes as well. And then a further question about how many more of those there are in this stacked vein system going out to over 200 metres to the west.
The global resource at Tuckanarra already has some impressive numbers, as you've mentioned. Is there a point of critical mass that you're looking towards for mining?
Yeah, I guess only sort of rule of thumb, back of the envelope stuff at this stage. In my mind, a standalone financeable proposition for a smallish mine today is probably 360, 400,000 ounces of reserves. In my mind, if we needed 350, 400,000 ounces of reserves to support an operation, in that environment, open pit, high grade deposits convert resources to reserves at 60, 65%. That's the case for New Murchison Gold's Crown Prince deposit. And it's also the case demonstrably in Great Boulder's scoping study for the Ironbark deposit. You get quite good conversion of resources to reserves. So I guess we want to get to a resource overall of, 700,000 or 800,000 ounces, and then if we get good conversion to reserves, that's probably a standalone scale of deposit. So that's the threshold we have in mind, and that's just based on open pit resources. Underground resources might change a little bit, and there's lots of underground deeper potential in our targets as well.
And how do you see the value of that resource even in the ground?
Well, that's a really interesting question, and I feel like we're in the incipient stages of a gold boom, and these valuations are starting to become more realistic by the day, but actually I see there's still a hell of a lot of upside, especially for junior resources like us. Neighbours in the area are valued on the ASX at $200, $150, $200 per resource ounce. So that's one threshold. Actually, where I really want to get to is a reserve ounce valuation, because the companies I mentioned before, Mika Metals and New Murchison Gold, they're trading on reserve multiples of $1,000, $1,200, $1,500 per reserve ounce. So we've got to generate reserves and then get valued on that basis, because if we can get to that threshold I talked about before of 350, 400,000 reserve ounces, then you're talking about valuations of $500 million, like those other companies, $300, $400, $500 million. So that's the challenge for us over the next year or two.
And so where do you go from here? What should investors be looking out for in the coming months?
Well, two things. We'll get another RC rig and probably a diamond rig as well back in there to continue to infill drill, but also test these targets. There's a 200 metre zone of known vein structures west of the cable bollard structures. This is set out in the figures in our recent announcement, and over 1.5 kilometre of strike through the historic Anchor and Trilby mines. So there's a lot of stuff for us to test out there. That whole area has by and large only been very lightly drilled with very shallow vertical holes, and we're now looking for high-grade vertical structures that range from 1 metre to 20 metres wide. So you don't hit them with shallow vertical drill holes. They were drilled historically looking for widespread laterite and oxide mineralisation. If you want to hit those structures, you've got to drill angle holes, of course. So we'll get the RC rig back in there and drill panels of angle holes looking to test these multiple stack structures. We know they're mineralised in areas where these historic workings are, or other drill holes have been lucky enough to be put right over the vertical structures. So we'll go back with a whole lot of angle drilling to really test what the potential of that whole area is. And to quantify that, I mean, 1.5 kilometre of strike in the Cable Bollard Highway deposits, which is where our resources are, there's 350 plus thousand ounces down to 120 metres there between our existing resource and what was mined there historically. And so this Anchor Trilby trend, as we're talking, as we describe it, the parallel trend, is of a similar scale. So that's the challenge for us, to go and test that stuff. We'll also be finishing off the mining study. It's essentially finished now for mining those existing deposits. The results of that look very encouraging. We'll finalise that over the next week or so, and then I expect we'll make the decision formally to go to a scoping study on the same basis for those deposits, those resources, and of course we've got to drill some more of the inferred material in that study up to indicated, so that will also continue to generate news flow.
Well, sounds like you've got your work cut out for you.
We certainly have. Parallel with that, of course, we'll have a dialogue with our joint venture partners, Monument Mining, about the possibilities of processing our ore over there at their Burnakura plant, which is only 30 kilometres away. They want to upgrade that plant to 750,000 tonnes per annum. So now that the mining study is finishing, we'll push ahead with that sort of discussion about the processing options that are in front of us. So that's pretty exciting too.
Matt, thank you so much for your time today.
Thank you very much, Tyler. Good to talk to you.
You too.